Welcome, ladies and gentlemen, to the weekly market analysis on the cryptos. We are doing the Bitcoins analysing. We are going to be looking at all of the Bitcoins. Before looking at the Bitcoins, it is important to look at oneself. It is very, very important to understand one's internal state, right? So what we do in India is we meditate, okay? Not enroute, we meditate, okay? So what you do is you close your eyes and then you focus on the Bitcoin price going up and the Bitcoin price going down, 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 lower than where you thought it was going to be. Do not cry, do not try to stop it. The tide goes out, the tide comes in, the Bitcoins go up and the Bitcoins go down, 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 down and lose everybody's money. When you are ready, open your eyes to what is really going on in the world and start actually paying attention to the data that we are going to present to you today. Thank you for joining us for this Bitcoin meditation. Just looking at where it is today, this is the total crypto market, right? It's just rinse and repeat every single time, right? Every time there's a bump, everybody gets excited. They run in and start buying because the price went up. The price just recently went up. You know, we went from whatever 16,000 to like 21,000 now, 22,000. Everybody's screaming, is this the time? Is this when it goes? And all this stuff. We're looking at the weekly, right? We zoom out and look at the weekly. So each one of these candles is a week. When you look at it from that perspective, do you think this little pump is like something you are concerned about missing or whatever? No, have patience. These things go like this, up, down, up, down, up, down, up, down, up, down. Bear markets are like this. Just a lot of ranging, it's called, in the same area, okay? So is it going up? Sim, is it going to run away now? Do I need to sell the house now and buy it? Well, first of all, to answer the question, selling the house now, the property markets are dropping off of a cliff in many places. So I'm not saying you should sell the house, but if you've been thinking about selling real estate, you should be paying attention to the property markets, which are usually an early signal of a massive recession coming up, and those have all started to turn. US is starting to go down, Australia is starting to go down, Germany is starting to go down. Bali's still on the way up, but it will turn at some point. Again, not saying sell your house, okay? But just, is crypto going to run? So let's zoom out. Let's really zoom out and let's look at the very, very big picture of things, okay? So here's the news for this week. Layoffs across the world are going crazy. Massive companies are laying off massive amounts of people. That's usually not a good sign. When people get laid off, they don't run towards assets and go buy them, which is what makes the prices go up. At the same time, banks have started giving credit to everyone. Just there's people without even asking being given credit, which again is not a good sign. Because remember 2008, last time, the reason why it crashed was because people who do not have a good credit, who shouldn't be given a bunch of debt because they can't afford to pay it back, were being given debt just so that banks could maintain themselves. Because remember, debt is what banks feed off of. They're like vultures, and debt is like dead flesh. Sorry for the visualization after that meditation. The US is coming up with funky ways of messing with their debt ceiling. So if you don't know about this, the US debt ceiling is this fake made up limit that they tell themselves, okay, we're only allowed to borrow, the government is only allowed to borrow up to this level. And if we hit that level, we're not allowed to borrow anymore, okay? What they keep doing is every time they hit the ceiling, they just raise the ceiling. It's telling yourself, I'm gonna eat this much garbage food, and then when you eat it, you just raise the amount of limit that you're allowed to eat garbage food for. It's not a good way to do it. You will die of a heart attack. The US is going to die of a heart attack of debt. But now they're coming up with weird rules, figuring out ways to work around that debt ceiling and use financial wizardry to keep the debt ceiling where it is and still be able to borrow more money, which then it's not really a ceiling, is it? Regardless, they're trying to do that, while at the same time, the money supply is shrinking, which in simple terms means that, because remember, we know assets, crypto, houses, everything goes up when you flood a bunch of money into the system. When that money supply is going down, the money's flowing out of these assets. So the very big picture is the pool, the ocean, like we talk about, the liquidity ocean, the liquidity ocean is going down. So do we think crypto is going to pump? I don't think so. That liquidity needs to be pumped in from that side. Now, up until now, this whole process has been, the Federal Reserve raising interest rates to try to save the world from inflation, which is not working. And people are pretty sure that they're going to stop this process because logically at this point, companies are starting to lay people off. Assets have collapsed. There's deflation happening while inflation's happening. Welcome to the weirdo world. And they should stop. Are they going to? Probably not. You know why? Because they're the ones who want to destroy the financial system, because that's how they take it all from us, right? So they're probably going to continue raising the rates, continue breaking the markets, which means continued amount of money flowing out of assets, which means at some point something breaks. So we've been saying this for a while. A lot of the experts are saying the same thing, and I think I agree with them. At the same time, over $2 trillion have flowed into something called the reverse repo facility, which is a simple place where banks park their money and get a bunch of money debt-free or risk-free. But that is also pulling money out of the system, which means, again, it's unlikely that these assets, we're going to go on the next crypto bull run, okay? Money's flowing out of assets, not into assets. Some of the experts are saying that because all of this is happening, things like copper are going to blow up. Copper, precious metals, commodities, food, oil, energy, all of these things, because that's the real wealth and the world needs it. Those things are going to pump. So real earth elements, if you're in there, good. It's looking good for us. It's a multi-year plan we have, and it looks like it's starting to come to fruition already. So at the same time, the US dollar, which, remember, the US dollar dropping is good for crypto. US dollar going up is not good for crypto, because when it goes up, more money flows into the dollar. When it goes down, money flows out of the dollar. The dollar has been dropping for weeks and weeks, or months actually, since, October of 2022. It's been dropping since then. It looks like it's going to turn around. Okay, so the dollar is probably going to go up again, because things don't just drop straight down. When the dollar goes up, more money flows out of assets. Okay, and what I posted a short about this on the YouTube channel, which, if you're not subscribed, please subscribe, please like, please share, because that is where you're going to get a lot of this content, and even this content is going to go there now, which that's where you're watching it. Why am I telling you this stuff? I'm new to this thing, new to this YouTube thing. I have to tell you on YouTube to go watch it on YouTube. So that short was talking about how we are now seeing big money running and dumping in the stock markets more than we've seen in a very long period of time. Last time it happened this bad was during COVID, which is usually an early signal of way more pain to come in the traditional markets, which means way more pain to come in crypto. And if the dollar is going up during that time, all of that lines up to say we have way more pain left in crypto, which is not a coincidence that at this time, things are pumping like this to convince everybody, hey, good times are back, get back on the ship, blah, 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 blah. So on the other side, we can just blow up this whole market. And then finally, DCG, Digital Currency Group, the owner of a huge number of crypto platforms and a massive part of this market, is teetering on the edge of bankruptcy. They've been teetering for a while. Now they're teetering on the teetering. They were teetering on the edge. Now they're teetering on the edge of going bankrupt, which means no good things. So if DCG goes down, crypto market's gonna get hit. And if all the other companies are getting hit, DCG is probably gonna get hit as well. So Welcome to a week of fantastic news, right? So all of that is pointing towards, so let's just recap. Layoffs, not good for crypto. Credit being given, not good for crypto. Money supply shrinking, definitely not good for crypto. Reverse repo sucking up money, not good for crypto. Dollar may go up again, not good for crypto. So what is actually happening? What happens again and again and again, and I can't believe people don't realize this after the millionth time it's happened, is when crypto is ranging in that range, what was it, 16,000 something, and it stayed there for like weeks and weeks and weeks, then the traders put in shorts. They make bets on the price of it going down. And once there's a ton of bets, there's billions of dollars on bets saying, I bet the price goes down. The people who own the markets, called market makers, will pump up the market in the opposite direction, which means everybody who's made those bets loses their money. It's called a short squeeze because they're squeezing everybody who's short on the markets and they're squeezing the juice, the money out of them. And then the market runs like this. Everybody loses on those bets. Then it'll go up to a certain level, might go to 23, 25, as high as 28. And then once it's done that, it'll hang out there for a bit, convincing everybody, hey, you're going to miss the ship, FOMO onto the ship. Now that it's gone up a lot, it might leave without you, get on the boat. And then when everybody starts making bets on the price going down, they dump it quickly, which is a long squeeze, which means anybody who's made the bets on the price going up loses all of their money. And then anybody who ran in with emotion, not understanding what's going on, will probably sell the bottom and they will lose all of their money. Welcome to the story of the rich people knowing how to use emotions to take everybody's money. This is how it plays out. Up, down, up, down, up, down, right? So just looking at some stats. First of all, one of the things that we're seeing is in this pump, whales are not participating. This is a simple metric that looks at whale activity in a simplified way. There's many different ways of looking at it, but this metric specifically looks at whale activity. When it's up, that means there are whales participating, which is good, right? If this pump is happening and we see a lot of whales participating, that looks good. This pump happened, you had some whales participating, that was good. This dump is happening, whales are participating, that doesn't look good. Right now, whales are not participating from this metric, which means the people who are rich, the whales, are not buying right now, okay? And this is a few days old, which means it's ancient, which means why are we even looking at ancient? This is from this metric looks like it's from our grandfather's era. Our ancestors 4 days ago were doing this. Who knows what's happened today? This is a metric looking at are flows flowing, is there a flow net into exchanges or out of exchanges? So obviously with the whole FTX thing, we saw a massive amount of outflow from exchanges. It is coming back to even, but that just means net, that there's the amount going out of exchanges is becoming even with the amount coming into exchanges, but that still doesn't mean that good times are back, right? Good times look like this. So, we saw a big pump, prices pump. We saw another pump, prices pump. Here, it's neutral at best, right? Now here's some good news. See, I have good news. I'm not all just like gloom and doom and death and doom, This is how much, in simple terms, how much is Ethereum being used? How much are the smart contracts? How many new smart contracts have been created? Like, Ethereum is a technology. It's a bunch of computers that are running. If they're being used to add value to people's lives, then it's useful. That means it's valuable. That means it's good. If it's not, it's not. So, we saw all this usage back here, and you saw what it did to Ethereum price back here in 2020 and 2021. Then the usage went dead and the prices were pumping. That's why at the time we were saying, no, this doesn't make sense. This is a fake pump. And of course it was a fake pump. From then until now, the usage has been dead. But in the last little while, the usage came back. It's looking good. And, the thing to remember about bear markets is these kind of metrics, the actual value generating metrics, will start to show life well ahead of prices pumping, right? Because when you're talking about billionaires, 100 billionaires, and the trillionaires who actually own this market and run this market, the big financial institutions, it takes them a very long period of time to get their money into the market without moving the prices. Because if they dumped $1 trillion into the market, the prices would just run off. So usually they have to go into this kind of process of scare you, convince you it's going up, then scare you, convince, scare, convince, scare, convince, scare. Oh, really scary. Convince you it's going up, then scare, convince, scare. And this is years of them slowly buying, convincing you to get scared at the wrong time and then buying it from you and then accumulating, right? Then they run the markets up. So this is not long enough for this process to play out. They're not participating. They're not part of this whole thing. So, all of that is pointing to, yes, activity is returning, but that doesn't mean we're back to the good old times again. This is another piece of good news. This is a metric called PUL multiple. It's been trending down since way back in like 2020 or 2021. These are all the experts that were right in the previous 2-3 years of this process playing out, right? I was watching so many of these experts like BitBoy Crypto and Crypto Banter, all these influencers who were saying it's going to go this way, it's going to go that way, and almost all of them were wrong. This group of experts were the rightest that we found, or at least gave a fair and balanced perspective all throughout and told the truth whenever they found out, okay? Nobody's right all the time, but consolidating them together gives you a really good view. So what we do is we have some experts from the very macro, very zoomed out world view. Then we have financial analysts that look at the whole financial markets. Then we have stock analysts that look at the stock markets. Then we have crypto analysts that look at the crypto markets from different angles. Technical analysis, harmonic analysis, mix of stocks and crypto, crypto itself, fundamental analysis, blah, 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 blah. Okay, so these are the experts. A simple way for you to look at this chart, if you don't want to listen to me talk for hours, is red means they think it's going to go down further. Yellow means they're not 100% certain one way or the other, and they're kind of neutral. Green means they think for some reason that it's going to go up. And when you look at the greens, they're saying short-term positive. Green, short-term positive. Short-term, right? And this one's saying positive, but, going to wait for more data and stuff. So short-term, yes, when things go like this, things pump. There is usually a little bit of extra pump that comes along, but we're long-term people. We don't worry about the short-term. So long-term thinking, almost everybody is either saying we're not going anywhere or they're saying we're going to dump lower. So let me just give you an introduction to all these experts. Gregory Mannarino is a trader. He's crazy, but he's right. Nowadays the crazy people are right. He is a trader from the traditional markets that has been telling the truth about exactly what the game is and how it's playing out. And if you've heard me talk, I've learned a lot from him, and he's been right. And I've been watching him since 2014, probably even before that. But he's been on the money as far as what the central banks are doing and which direction it's going to go. He's not 100% certain about the direction, but he is concerned that at some point they're going to break something in the financial system. I mean, at this point, it doesn't take a genius to know, hey, if they keep pushing the financial system like this, at some point something breaks. When that thing breaks, that will be used as the excuse to print a bunch of money and put it into the system. So he's saying that, direction, unknown, but he's the macro guy. He's a really big view guy. He also has this Mannarino market risk indicator. So the higher this is, especially once it goes red and other colors, that tells you there's insane amounts of risk in the markets. 200 it's alert level, but it's not like red alert level, right? It's orange alert level, I guess. That's why it's orange. The higher that is, it's good to track it because it just gives you an easy view on what's the very, very big picture doing. Heresy Financial is another. Why are the things crawling all over my face? This is what happens when you set up a studio in Bali, right? You're sitting on a terrace in Bali and you're just talking and there's just spiders crawling on your face because nature and harmony in nature, harmony with nature. Heresy Financial is another truth teller. He tells the truth as far as what's going on in the markets, what they're doing, how the game is played, and all this stuff. He's not really indicating a direction, but he is a macro guy and he gives you a good view on things. Ron Walker is a chart analyst. He's a small guy, but he was right in many ways previously. Steve Miller his analysis is bar none. Again, follow these people on YouTube. If you want these analyses, follow these people on YouTube because it gives you all these different perspectives. So we have zoomed out 50,000 meter, 50,000 foot view, Gregory Mannarino, Heresy Financial. We also follow Mark Moss. He does a lot of talks like that. Steve Miller does something called harmonic analysis on the equity markets and a little bit on crypto as well. And it's been very, very accurate. And again, nobody's right all the time, but it gives you a direction or gives you a view. So for him, he's saying short-term positive, long-term, it still doesn't look good, right? Blockchain Backer does technical analysis with some fundamental analysis. So, he's basically saying possibly for the short term it could be consolidating, but he's not 100% sure. But he was really right. Blockchain Backer actually, back in 2020, he was saying that Bitcoin's going to go to 70K and then drop off the cliff, and it hit the nail on the head. This guy's been uncannily right because of his thesis on analysis and stuff when everybody thought he was wrong, right? That's why he's on this list. So that's the first step into like crypto analyst specifically. Optical Art is another crazy guy. He does his own harmonic analysis with like circles. It just looks like psychedelic circles everywhere, but he's been right. So he's saying it's going down. At some point it's going to go down. He's a good guy to follow. Game of Trades is one that does like stock market and crypto analysis together and macro and stuff. So he kind of blends things together. He's saying smart money's exiting markets. That was the short that I made on YouTube. Please go back and watch that. So Art of Crypto, he also does market analysis and chart analysis on crypto itself. He's neutral. Benjamin Cohen, he has a very neutral and balanced perspective on what crypto is doing and very fact-based perspective. He's unsure about the direction. He's not running out and saying that it's going to pump from here. Crypto Crew University, another one he's been really, really good at. He's a specific technical analyst, so he analyzes charts. He's saying short-term upside. He was right in so many ways. Gareth Soloway is like, he was saying below $20,000 Bitcoin when it was 70,000, and everybody was laughing at him, but the man was right. So he's saying down. He comes from the traditional stock markets. Now he's started doing more of the crypto side of things as well. Paul Barron, he focuses on like the gaming side of things, but he does do market analysis as well. His indicators were one of the ones that we were using that were really successful. He's saying market go down, red. Hustlepedia does a lot of gaming stuff. He does analysis as well. And he's saying bullish for the short term, but let's see what happens. Coin Bureau, again, gold standard of factual information delivered in a very professional British accent. I wish he did more comedy now. Like, we're starting to do more comedy because, Coin Bureau and us, we're kind of on the same level. No, of course, he has like millions of followers and we have millions of legendary souls following us in spirit. Right? He's saying going down. Altcoin Daily is your like daily news. No clear direction, but they're really good at presenting to you the news that's going on. Don't get too crazy about following every single thing that they say because they get caught up in like that. As soon as FTX happens, they just follow FTX for an hour and just tell you a bunch of stuff that you don't need to know and ruin your day with it. Symmetry is one of the paid channels that we have, and they're saying it's likely to go down and it's this way. The reason why I'm giving this introduction like this, I'm not going to do this every time, is so that you can understand we're going from the very broad picture to deeper and deeper layers of analysis. And for you, you can just go live your life and look at this chart, and when all of these start to line up in a pretty significant way, then we know, okay, there's some good. The analysts are lining up from the top to the bottom. Everybody's starting to sing the right tune for us to know, okay, that the money is ready to flow into the markets, which means it's ready going to flow into the bond markets, which means it comes to the stock market, which means it comes to the crypto markets, which means we will all be jumping for joy again one day. And I promise you, one day we will be jumping for joy. And we're actually already jumping for joy because these are the times that make the best, they make the most amount of money for people. So just looking at the market itself, this was something interesting. The 200-day, or in this case, the 200-week moving average is something that, it's the 200-period moving average is something significant in most trading circles. And right now, the whole market is bumping up against that as a limit. That's usually not a good sign. It's like, when there's a ceiling over top, if you're bouncing on top of the roof, okay, but eventually you'll bounce on the roof enough and you'll put a hole in it. And then when you try to get above the roof, then the floor becomes the ceiling and it's hard to get above. So even with all this stuff happening, it doesn't seem like these giant waves of negative momentum that we've had are all of a sudden just going to turn around and become positive and run away, right? So it's more likely that this positive activity is then going to be affected by some world event that apparently we can't predict, but it's coming. That's going to dump everything off of a cliff. So please make sure you are prepared and meditate like we did at the beginning of this talk. Dollar we've already done. Stock markets and stuff, I'm not going to go through too much. We've already explained it to you in pretty simple English. But like, here's something really cool. You know, I've explained on-chain analysis quite a bit, but when you go through metric by metric by metric, it gets confusing because you're like, wait, the whale's going this way, and this is going this way, and that means that, and that means that, and the what, the who. I thought this is crypto for beginners, right? So Glassnode listened, and they actually created this one metric. It's called recovering from a bear market, right? And it's simple. What it does is it consolidates a lot of important metrics together to give a clear view on what is the vast majority of important metrics saying in one chart. Beautiful, right? Our goal is compress the knowledge, compress everything down to like, you're seeing this, one sheet tells you what the experts are thinking, and the experts are doing massive amounts of analysis and their teams are doing analysis. This one chart tells you what on-chain is saying, right? And here's the explanation. There's 8 metrics that are put together into these confusing bars down here. Don't worry about that. When it's light blue, that means at least 5 metrics are green in that situation. Basically, at least 5 metrics are green, right? And those 5 metrics are made up of like metrics within the 2 metrics each within them. So that's like 10 pieces of data on chain are saying that we're green. Okay, when it's dark blue, that means all 8 models are saying that we go up. Dark blue means, oh my God, everything looks fantastic. So when you look like during the bull run, it was all dark blue. Now it becomes dark blue super late, but I mean, even if you super late isn't like if you got into Bitcoin, you would have gotten into Bitcoin at 11,400 and you would have rode it all the way up to $60,000. That's not bad, right? So first of all, what are they saying now? It's white, which means we don't even have, it's no bueno. White, you see, like it becomes white during the bear markets, which means those metrics go to sleep and they're all saying, no, we're not going up. We're going to go down from here. So right now it's as white as it could be. That is not looking good. I was going to go through and explain all of these metrics, but this is for beginners. So I don't want to, right? Just know, let's just simplify the whole process. Light blue, times are good. Good times look like they are coming back. Dark blue means, wow, this is amazing. There is some massive movement that makes a big difference. Ideally, we want to get in when there's light blue for some period of time, right? Because whenever there's been a bear market, it gets light blue for, weeks and months. That really gives us some consistency. The news changes, the market changes. Things start to really take a turn that give us signals. And when the money starts to flow into the markets and our experts start to agree and the on-chain starts to agree and the moon is in the right spot and Venus lines up with Mars and we have cosmic alignment and the tarot cards say, okay, I'm just kidding. At that point, we'll start to care. So for now, bad times ahead. Turn this into a YouTube short. Hello. We're fucked. More fuckery ahead. Please prepare for fuckery. And we'll see you next week. Like and subscribe. Thank you so much.